It's time for the market prep video here on StockCast. Welcome back. We got geopolitical tensions, gold, oil, the VIX soaring higher. Not to mention we got a federal rate decision coming this week, and maybe more importantly, a press conference from Jerome Powell himself. All that and a lot more to break down. Don't forget to like, subscribe, and follow wherever you listen to podcasts. Now, let's get into it. Welcome back to StockCast, the market show for the average Joe. Whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host, as always, Brandon Shar. Happy Sunday, happy Father's Day to all the fathers out there. We got a lot to get into, so let's jump right in. So unfortunately, to end the week, last week, we had some new geopolitical concerns on the forefront. So let's jump right into that. So according to CNBC, Israel and Iran trade strikes for a third day as hundreds are reported dead. This is just terrible news, very, very sad. Israel late on Thursday attacked some of Iran's nuclear compounds and really attacking some of their oil refineries, some of their oil setups, right? And so it's really impacting the oil market, obviously, which we'll get into here in a moment. Israel unleashed airstrikes across Iran for a third day Sunday and threatened even greater force as some Iranian missiles evaded Israeli air defenses to strike buildings in the heart of the country. Planned talks on Iran's nuclear program, which could provide an off-ramp, were U.S. President Donald Trump in recent days vetoed an Israeli plan to kill Iran's supreme leader, a U.S. official told the Associated Press. So as of right now, we have a lot of uncertainty happening in the Middle East, a lot of people killed. This is, again, terrible news. Israel's strikes have killed at least 406 people in Iran and wounded another 654, according to a human rights group that has long tracked the country. Iran said Israel struck 2 oil refineries, raising the prospect of a broader assault on Iran's heavily sanctioned energy industry that could affect global markets. The Israeli military in a social media post warned Iranians to evacuate arms factories, signaling a further widening of the campaign. So this has been going back and forth really since Thursday evening, and there has really, unfortunately, been no let up. The attacks have continued into the weekend, and even here Sunday, we're continuing to see aggression from Israel, and Iran is going to be doing the same, right? So that is highly unfortunate and has had an impact on the markets, of course. And since this is a stock market show, we need to be looking at what tickers, what instruments we need to be looking at for trade ideas, right? So first of all, we need to take a look at the oil market. So obviously with Israel attacking some of Iran's oil refineries, that has definitely skyrocketed oil up almost 9% on Friday. Big jump, as you can tell here, on major volume. And so right now, oil is sitting at about 80.22 right now. And that's a big jump. It was right around 74. So above all the major moving averages, this thing is ticking up. Let's quickly take a look here at a broader scope on oil to see where we might be headed. So if you take a look here, for those on YouTube, we do have a 52-week high on oil at 84.58. And again, as of Friday's close, we are at 80.22. So creeping up to that major gap up here. Technically closed red, but as you can tell here, a lot of buyers stepped in from the low around 78, pushed it back up over 80. And so I would imagine with the continued difficulties overseas in the Middle East, as Israel continues to attack Iran's oil, that's obviously going to push the price of oil up, right? So as far as some technical levels to be paying attention to, if you are trading USO for United States Oil, the ETF, we do have a level, it appears, based off of the 52-week chart, right around $82, so about $2 away from that. And again, 84.58 being that 52-week high. So I would definitely be paying attention to oil this week. If you're looking for something that, has a news catalyst, a lot of uncertainty over there. We don't know what's going to happen yet. As far as, the options chain for USO, obviously more calls than puts on Friday, 153,000 calls versus 139,000 puts. So definitely a ticker to have on your radar for this week. Let's take a quick look here at gold, which continues to soar. I mean, it's been on really a bull run for the past year. We had lows at 212, pushing 317 here based off, the gold ETF. So as of right now, we are sitting at 316 with an all-time high on the ETF at 317. So I would imagine this is going to continue to also surge as we have investors maybe going more towards precious metals, commodities, things like that, due to the risk-off environment that we are in the very short term, I would say, coming into in light of the Israel-Iran conflict. So I would definitely be keeping an eye on gold as it continues to push higher. It's, been insanely bullish for a while now, as I was saying, pretty much this past year, and just continues to push up. Looking at a 1 hour chart, it looks fantastic, and I would venture to say it's going to break the high we saw in pre-market on Friday of 317. I would venture to say this thing's going to continue higher. Another thing for you to be paying attention to, obviously, the puts are getting heavily outweighed by the calls and the options chain on this one in particular. Put to call ratio 0.24, very, very low. Calls on Friday, 728,000 versus puts, 178,000. So very, very bullish on gold. Most people are, as far as their options bets, right? Taking a look at the VIX, definitely got to push up Thursday night into Friday, again, due to primarily this Israel-Iran conflict. As of right now, it is above 20. So that's not great. Definitely want to see the VIX get back below 20, ideally, to show some stability. But as of right now, we are above 20, and it will be interesting to see once the futures markets open at time of recording. They're not open yet. To see where we're at, if the market's going to show some resiliency and the VIX will fade a little bit, or if it's going to be similar to, Thursday evening into Friday morning last week, where we have a sell-off in the futures markets and we see the VIX continue to climb higher. Keep in mind that we did have a VIX high of 25 a couple weeks back, and so we'll see what the VIX is doing. I had some calls on the VIX Thursday into Friday, and those paid out pretty well. Maybe I should have held them, but I took my profit. So that's where we are at right now on that. Taking a look at the S&P 500, obviously we had a sell-off on Friday due to all the uncertainty. If you take a look at SPY, it was down just over 1%. You had the NASDAQ down 1.26%. And really all of the sectors in the S&P were down on Friday, with the exception of energy, which of course makes sense given the situation with oil and Iran and some of those energy prices assumingly getting pushed up, right? So that's where we sit at right now. Taking a look at the heat map from Friday. Oracle was really the standalone. I believe they reported earnings. They were up over 7% on Friday, but the rest of the market in general was down pretty big. So moving on, let's take a look at the economic calendar for the week ahead, see what we got going on. Keep in mind that this week is kind of odd. We do have the markets closed on Thursday for Juneteenth, so keep that in mind. On June 19th, the markets will be closed, but will be open on Friday, right? So the markets close Thursday, open on Friday. Take a look here at the economic calendar. On Tuesday, we're going to get core retail sales, previous of 0.1%, forecast of 0.2%. So a slight uptick expected in core retail sales coming out 8:30 a.m. Eastern on Tuesday, June 17th. In addition to that, retail sales month over month for May are expected to drop off a little bit there. So we'll see how that lines up relative to core retail sales, which are going to be a bit more important, I think. Taking a look at Wednesday. Wednesday, we get initial jobless claims coming out at 8:30 a.m. And then, folks, we get the FOMC economic projections, the FOMC statement coming out Wednesday at 2 p.m. Eastern. And obviously the Fed interest rate decision as of right now, not really expected to go anywhere, expected to stay pretty much the same as of right now. We're pricing in just about a 96% chance that we stay where we're at on that Fed interest rate of 4.50%. As of now, we're not really expecting a Fed rate cut until, I would say, probably about September seems to be the consensus right now. Pricing in about a 58.6% chance, according to CME Group, of a September cut on September 17th right now. So that's where we stand right now. And I would say really what's going to be more important, I don't think we're going to get any surprises with the Fed rate decision, but I think what everyone is going to be looking to pay attention to is what is Powell's tone, right? Because at 2:30, we're going to get the FOMC press conference and get to hear from Daddy Powell, the Federal Reserve Chair himself. And so really what we're looking to see here is, in light of this new conflict with Israel and Iran, how is that going to impact the Fed? Obviously with tariffs still ongoing, some uncertainty there. Is he going to have more of a dovish tone? Is he going to have more of a hawkish tone? Those are just a few of the things that we need to be paying attention to. And really when we're talking about the Fed, right, they have a dual mandate. You got to keep that in mind. Their job is really twofold: to keep inflation low, and then obviously to keep employment high. And so they are trying always to balance those two things. And so right now with higher oil prices, that is going to push inflation up. So although we've had some decent reports from CPI, PPI, things like that, unfortunately, it doesn't lend itself to a dovish position when you have oil surging off Israel-Iran conflict, geopolitical risks. That is, more going to lend itself more to a hawkish tone, pushing inflation higher. Markets are jittery right now too. You got to keep that in mind. Yields rising. It's going to lend itself to a cautious reaction from the Fed, most likely. Again, rates are probably going to hold steady in June. And again, the rate cut timeline, we're basically looking later in 2025, September. But hey, look, it could be later than September depending upon what happens, right? If inflation due to oil continues to skyrocket, we could get pushed out to October, November, maybe even December. Who knows, right? So that's where we are at right now. According to this article from Reuters, Fed to keep rates steady is tariffs, possible oil shock, counter inflation data. So, this has got to be frustrating on some level for Jerome Powell and the Fed when you see inflation coming down and then your only concern is really tariffs and how those are going to play out. And then all of a sudden you get this geopolitical situation which pushes inflation back up. And so it really puts the Fed in no other place than to sit on their hands. The Federal Reserve is widely expected to hold interest rates steady next week, with investors focused on new central bank projections that will show how much weight policymakers are putting on recent soft data and how much risk they attach to unresolved trade and budget issues and an intensifying conflict in the Middle East. Obviously, this isn't a good situation for President Trump, who's been, calling for Jerome Powell and the Fed to lower rates for some time. With oil going up, that's definitely not going to help anything. So that's where we sit at right now. Definitely be paying attention to that press conference from Jerome Powell. Again, that's on Wednesday at 2:30 p.m. Eastern. And I would expect a pretty volatile reaction from the market for my short-term traders, my degens out there, just wait a couple minutes, right? Wait a couple minutes. We know what the Fed rate decision is going to be. I personally will be waiting until Jerome Powell starts to talk to try to get a gauge on maybe a quick zero data expiration play on SPY or Q, something like that. Whether a call or a put depends on his tone, right? And typically we see some decent follow through from whatever direction we head based off of Jerome Powell's tone, whether it be hawkish or dovish. So moving on, let's take a look at some interesting news that came out on Friday, and the market was essentially selling off due to the conflict again. One of the stocks that was not necessarily selling off with the rest of the market intraday on Friday was Tesla. So Tesla, on Thursday was right around 326, got beat up overnight due to geopolitical tensions down to 310. And then intraday, this thing, initially was kind of choppy for about the first hour and then started to really take off right around 11 a.m. We went from about 317 all the way up to 332, closed out at 325. And so you might be asking what caused that. We got some news that dropped on Friday. The Reuters, U.S. agency streamlining self-driving car exemption reviews. So the National Highway Traffic Safety Administration on Friday said it was streamlining reviews of requests filed by automakers seeking to deploy self-driving vehicles without required human controls like steering wheels, brake pedals, or mirrors. The authority is set to grant petitions to allow up to 2,500 vehicles per manufacturer yearly to operate on U.S. roads without required human controls, but the agency has spent years reviewing several exemption petitions without taking action. So a bit of a bullish news article here that came out on Friday for Tesla. Myself, I'm sitting in some Tesla calls that I swung over the weekend. A bit risky in light of geopolitical tensions, but I like the news article, and given the fact that Tesla has already been beat up due to the Musk-Trump drama that we saw the previous week, I like the chances of a recovery. And really looking at Tesla this past week in general, had an excellent week in light of everything that's been going on. I mean, just taking a look where it opened up on Monday last week, 285 to close out the week at 325. It had a very, very bullish week. As of right now on the daily chart, we are above the 50 and 200-day moving averages on Tesla, and the 20-day moving average is currently sitting at 334. As you can tell here, we did tap it not only on Wednesday, close on Thursday, and on Friday. So it continues to run into resistance there. So because of that, that is a level I'm looking at. We did have support right about at 334 back on May 22nd. So that is the initial short-term level I'm watching on Tesla, looking to see if we can get a bump above that. So definitely Tesla is always worth having on your radar. Definitely something to pay attention to. If we look at the options chain, fairly bullish on Friday, 2.5 million calls versus just over 2 million puts. So that's what we are looking at right now. And keep in mind that this week is a monthly options expiration. So we could see some volatility there. And just lastly here, the RSI, the relative strength indexed for Tesla right now, is really sitting at a great spot if you are looking to be, in calls. In my opinion, we're sitting at 52. So right smack dab in the middle. We are not insanely overbought by any means. And so I definitely like the chances, the probability of some continued action to the upside. And lastly, let's take a look at the latest on tariffs, folks. Again, we have a lot of uncertainty around tariffs, the deadline coming up, and really just overall trade risk. Obviously, we did get some positive news between the US and China last week from the talks in London. Seems they have come to a temporary deal, but we still have a lot of other countries that we are paying attention to. This article, according to Yahoo Finance, the Trump administration is offering 3 different scenarios for how Liberation Day 2.0 may play out. A key deadline in President Trump's trade war is getting closer, with a 90-day pause on his Liberation Day tariffs set to expire on July 9th. But what will actually happen when the clock strikes midnight on what some are calling Liberation Day 2.0 is anyone's guess. A series of comments from Trump and his officials this week, even within a 12-hour span on Wednesday, were notable for the variety of scenarios they have on the tables. Basically, right now, what we're looking at, a few different scenarios, one of which could be, we just get letters that get sent out. You might have an extension for some countries that, as we've heard, Trump's administration say numerous times now, countries that have been, quote, in good faith, negotiating in good faith, right, might get an extension, but some other key countries may just simply get a letter and, the U.S. is going to tell them, hey, look, it is what it is. This is your tariff rate. So we have a few different scenarios kind of playing out right now. We'll see what happens. According to this individual on the article, I think this is going to be like a potluck. There's going to be a little bit of everything. On the menu for about 130 nations will be letters, she suggested, and I'm optimistic their rate will be in the 10 to 25% range. Other nations may be able to secure limited deals, such as a recent pact with the UK, but with plenty of tariffs staying on or being added, others may get an extension for now. So in addition to geopolitical tensions raising inflation, you have the Fed in an interesting situation where there's still a lot of ambiguity around tariffs and what we are going to see in the weeks ahead. So all of that to say, we have a lot of uncertainty in the market currently. That is really going to be interesting to see how Jerome Powell and the Fed address that this week. Again, on Wednesday, when we have that Fed rate decision, very high probability we stay at 4.5 for the interest rate. But more importantly, I would argue that press conference from Jerome Powell at 2:30 p.m. Eastern to see how he's going to be weighing inflation, tariffs, geopolitical tensions. It's a lot on his plate. I wouldn't want the job, and so we'll see what happens. Keep in mind, if you haven't already, make sure to check out a couple different things that we've released here on Stockcast. We do have our mini-series on the Disciplined Trader written by Mark Douglas, put out part 3 this morning. Make sure to check that out. Trading psychology, very, very important topic. A lot of people overlook, just jump right into setups. But if you don't have the mental game figured out, you're already losing, right? Also, we did a live interview with Kevin, aka the Market Bishop, a seasoned options trader. Fantastic interview. We did that yesterday. I will be posting the full edited video on Tuesday morning. So be on the lookout for that. Make sure to check that out. Excellent, excellent content there. And I will also be back, of course, for the midweek check-in. That'll be dropping Thursday morning, 8 a.m. Eastern, right before we get the bell on Thursday. Well, no, actually Thursday we won't begin the bell because the markets will be closed. So all the more reason to check in and see what we're bringing for a midweek check-in. Let's see what the Fed does. Let's see how things go overseas between Israel and Iran. Hopefully we get some resolutions there soon. There's a lot going on, folks. Make sure to drop a comment. Let me know what you're paying attention to. Are you trading oil? Are you trading gold? You're looking at Tesla. Palantir continues to soar. Oracle, there's a lot going on right now. That's why we love the markets. There's always something new. So let me know what you think. Make sure to like, subscribe, and follow wherever you listen to podcasts. And folks, remember, plan the trade, trade the plan.